What's up, guys? It's September 19th, 2025. Had a nice rally in the markets today. I didn't trade the futures account, but I caught this entire rally on the options account. I hope you guys caught some as well. Before we get started, if you guys are returning viewers or even new viewers, can you do me a big favor and drop a comment on what you would like to see that could help you become a better trader, and how I can, if we have to do live sessions maybe on a Sunday, just talking about plays or reviewing trades, or just tell me something I could do that could help you guys become better traders. And with that being said, yeah, let's get into it. This is the ETH session. I don't know how to do a contract rollover. It usually does it automatically, but for some reason it's not showing up. So we'll just do it on the ETH. Bar one is like, this is bar one, this bear bar. So we'll just remember that. Weekly chart, daily chart. This is an interesting day because its price action is fractal. Leg one, pullback, leg two, but leg two had 1, 2, 3, 4, 5, 6, 7 bars in a row before we got that trend line break. Then we got that trend line break and boom, we catapulted. That's the same setup on a 5-minute chart. I can find it right now. Yo, here it is. Look. Oh, even right here. A couple times. So, a lot of bars in a row. First trend line break, rally to a new high. A lot of bars in a row. First trend line break, rally to a new high. A lot of bars in a row. The low of this bar is 1975. The low of this bar is 1975. So this is actually a double bottom. But look, new high. A lot of bars in a row. First trend line touch, I guess. No. The first trend line break is right here. Because this is a bar, that's a new low, and then we rally to a new high. So the price action is fractal. What we use on one time frame, we can apply to all time frames as long as it revolves around the first principles. The market's either breaking out or reversing. So yeah, with that being said, let's get into it. Bar one, big bear bar, closing on slow. Big bear bar closing on slow, and bar two. It's weird to say because there's no numbers. I would just use the ETH numbers, I guess. That's annoying, but we're gonna use ETH. So this is 105, 108, blah blah blah. Well, this is also bar one. All right, just bear with me in this breakdown, guys. Bar 103, big bear bar closing on slow, produces a gap, shot to get a second leg, but it's right above support, and the market has been rallying. Then we see a deep pullback for the bears. So this is a pullback for the bulls, like one, pullback like two, but this pullback also becomes a breakout that gets its own pullback and gets 3 legs down. So then we see a deep pullback for the bears. I'm talking about this leg here, which is also the leg one, pullback leg two for the bulls. Bar 104 sells off in the reverses, trapping bears. They short higher. They have a quick opportunity to get out of break even. So bears that short down here, short up here, get out of break even. Market rallies, bar 106, get a double top here. The bulls that buy here, buy more lower, and they get out their original entry. That's enough selling pressure, and that creates multiple legs down. A lot of back and forth. Could argue that there's 3 legs down here, leg one, pullback leg two, pullback leg three. Also a trend range, so it's breakout mode, and then a bigger picture. Leg one, pullback leg two, deep pullback bar 119. Leg one, pullback leg two, pullback leg three. This training range, small training range, it gets a breakout, bar 115, 116, 117. 3 bars in a row, chance to get second leg. We put the top of the fibs here, bottom of the fibs here, the 50% marks here. So bulls buy up here, they buy more lower, get out, break even. They made some money on bar 119. So be skeptical if you're going to get short here. Bulls have already made money here, and now they made money again. This was a good bar closing outside. This was more of a scalp, and you can see there were more sellers at the EMA and more sellers below bar 116. The market sells off for 3 to 4 bars. 1, 2, 3, 4 bars in a row. Within these 4 bars only, bar 125 is the first pullback, and it gets a second leg, leg one, pullback, leg two. Good enough for a scalp. Again, not a trade I would take because that's trading into a third leg. The what I think, although we rallied today, I do think the trade of the day from a visual and context perspective was this leg right here. Visually, it looks nice. 117 bear bar closing on slow with a gap. Context, it's breaking out of this range. Kind of hard because there's a leg down here, so you could argue that this is not a true first leg, and then because leg one, pullback leg two. But in terms of just like this gets its own second leg, I think it's a great looking leg because it creates a gap. You get filled, and then it closes below the 50% mark. So that's nice. It does rally again on bar 121. If I was short here, that would make me feel uncomfortable, but that ends up being a reversal bar, and it sells off for its own leg two all the way down to bar 127. Why did I think bar 128 was an inside bar this whole time? Huh, that's funny. It's clearly not an inside bar. For the options trades, I still look for breakouts and single legs, but I try and buy options when they're crushed. So I bought a long contract here. And then I loaded up on this bar, and I actually exited on right around the upper half of 174. But I am done trading options. I want to really focus on 3 trades a day after 7 a.m. PST on my futures account, because the potential for trading futures and making money and scaling is way higher than options. I told myself I'm going to automate Forex, which I'm doing. I have the automated system running Forex. I'm not making money on it, but it's running. I want to swing options, and I want to scalp futures. And that's all the market's covered. And when I swing options, I'll also be trading stocks. So I need to stick to that plan because that's where I think the most money is at. I do like trading 0 DTEs, but it's been a rough week. I got crushed a couple times. I made it all back today, but I don't think it's worth the stress. So I'm going to stick to the plan. Anyways, that's enough of that. Really nice rally from 128 all the way up to 137. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 10 bull bars in a row, producing gaps. Gap here, that's good. But what I like is to see a breakout gap. So there's a gap above both EMAs. Gaps happen at support and resistance. We have a follow through gap. It's just, I'm not a buy the close trader, but you could buy any of these bars for a scalp and make money. I actually would pretty much miss out on this entire rally, which is interesting because it's a really nice rally. No 50% pullback here. So these 3 bars do get 50% pullback, but I don't know if I would have taken that. If I did, it obviously would have worked, but I get very uncomfortable when my stop is on the EMA. So sometimes I just skip those trades. But yeah, so that's enough of that trade. Here's a trade I may have gotten filled. I'm doing this upside down. There we go. See, the problem with this rally is there's a lot of selling pressure. I don't like the way any of these bars closed. I like to see at least 1 bar closing on its high. So here's 1 bar closing on its. I like to see at least 1 bar closing on its extreme. Bar 117 is at least 1 bar closing on an extreme with a gap. So that's a bonus. But nonetheless, there's a channel here, bar 151 to the high of 155. Sells off. Bear short up here. They short down here. Buyback shorts, which lines up with the EMA. So this is a trade structurally. So I said I wouldn't like to take this trade because of my stop loss, but this has a high probability for second leg. But structurally, I would have liked to take this trade because I could put my stop loss below the EMA and get filled here, and I'd be buying on the EMA. So maybe I would have taken it. Again, I don't like to talk about like I would have done this, I would have done that, because the chart's printed. It's easy for me to say, oh yeah, I would have taken a win and trade. Of course I would have taken it. It's already printed. But maybe I would have, maybe I wouldn't have. I don't know because there's no bars closing on their high. What I do like about this is the pullback. Leg 1, pullback leg 2. So if we're in a bull regime, we have a good breakout. Bears are going to get second leg traps. Leg 1, pullback leg 2, second leg trap onto the EMA. Bang, rallies into the second leg. Again, I don't know if I would have taken this leg now because leg 1, pullback leg 2, pullback leg 3, but it would have worked. See? And this is the type of trade I like. Bear short down here, the short up here. Build on this bar, you pretty much sit in maybe 2 3 ticks of profit, and it hits target. It hits like 3R target very quickly. I probably would have hit 1.5 or 1.2, and that would have been me for the day. But I didn't trade futures today just because I got beat up by yesterday. We'll be starting clean on Monday. Looking forward to that, and I'm gonna be tracking my trades because I need to. Anyways, leg 1, pullback, leg 2, bar 166. It's shallow pullback, and there's a gap here, so that's nice. This is a trade. So visually it looks great, but it is a third leg, so this could have just as failed. We were in a trading range. We were trading below the high of the day for the most part. So don't know. Broke out above the high of the day, retested, and we had a nice end of the day rally, closing out Friday. This entire rally strong to get a second leg, and it doesn't get the 50% pullback though. You wouldn't miss it. But I want to talk about this real quick. So look here. So these are all bull bars, that's right. But do you see this bear spike on 169? Bears did short up here, and they shorted up here as well. And they actually did get their break even. So bears short up here, they short up here, they buy back shorts, and it rallies. So I pulled from here to here, but this is not valid from the way, I don't know, Al Brooks or Ollie would say that the same. This is just what I've noticed, because the break even bears from 167 are already out, but bears who shorted here thinking this is going to be a reversal bar are now trapped. So if we pulled from the last known trapped bears to the, so bears get trapped here, you could argue they get trapped on 173, but they don't get out at break even. See how it doesn't hit the 50% mark? But then you pull it to the high 174, and they do get out at break even right around here, and then boom, rallies 1.5 bar. So something to think about, because at the end of the day, the dynamic for second legs is front running traders, trap traders, and then we are the third set of traders looking for that second leg. Anyways, guys, again, please, if you made it this far, drop in the comments how I could help you guys become better traders. I want to make sure, I did start, just that, yeah. Anyways, you guys have a good weekend. Thank you for your time. I'll talk to you guys on Monday. Bye, everyone.